Sharing live stream. Okay, so we are on. I'm waiting just to get a confirmation from. All right, live stream, got it. Okay, we are on. Hello, everybody. It is Monday morning. What are we? October the 2nd already, October 2nd. So today is a holiday in BC, and I don't know if it's actually across Canada. I don't think it is because I have people across Canada reaching out to me for stuff. And I was like, okay, if it's a holiday across Canada, then a lot of us would not be working. So I am still broadcasting on because I am committed to showing up every Monday. So welcome to Money Matters. So it's Monday here. So I am Huong Lu from Cash Property Inc. And today we are going to be looking for some deals on Realtor. I will walk you through some of the analysis on that. And I have a couple of questions that came through from my coaching groups, from the mastermind groups. So I will be answering some of those questions today. Now we are going to flip the agenda a little bit. Up until today, we've been doing the analysis at the end, but today what we're going to do is we're going to do the analysis first and then do the questions afterwards. So before we get into it, I do want to put out a disclaimer that the comments, ideas, suggestions that I put on here is really my ideas and suggestions. Please, please, please go and talk to a lawyer, accountant, a financial advisor, other people in real estate before you go and implement any of the stuff that I'm showing you here today. Also, just do your due diligence, double check on a lot of the information. Okay, so even though I spend my days absorbed in real estate, it might not be the right path for you, or the suggestions might not be right for you. Okay, so just a little tiny disclaimer there that's taking a little bit of time to get across. All right, so welcome. Okay, so we are going to be together for about 30 minutes. So please, if you have any questions that you want me to answer on today's call, please go ahead and put it into the chat and I will make sure that I cover it today. If not, then maybe next Monday. And I will put in here that even though next Monday is also a holiday, I will still be showing up. Okay, so first things first, let's bring up the Realtor.ca and let's look for a property together. Okay, so this is the site that I use a lot, called Realtor.ca. So this is one of many places that you can go and look at. So let's go in here because I know that when a lot of individuals are starting out in real estate, they get analysis paralysis. They don't understand the analysis that goes behind looking at a property. So let's just randomly pick a place. I've been looking over in BC. So let's go into Cranbrook, British Columbia. Okay. The reason why I've been looking out there is because I know that the population here is expected to grow. It's a touristy area, but it's also very beautiful out there. Okay. So I'm going to go into here and filter out for multifamily. So here we go, multifamily. I'm going to leave it as the number of units, the bathroom, everything, just open just to see what's available out there. Okay, of course, nothing. That's fantastic. So there is nothing available in Cranbrook, BC, so that's fine. So what I'm going to do now is instead of looking for multifamily, I'm also going to go and maybe look for commercial. Okay, so I'm going to get out of this one, go over to, where am I here? Okay, so I'm going to go back over here. So this is Cranbrook here. I want to go into the commercial side of things here. So residential, where is it? I'm on the completely wrong page here. So I'm going to go back over here, Realtor.ca. I'm going to go into the beginning here. And then you see this commercial tab. That's where I want to go. Okay, and let's just see what's available in Cranbrook, BC. Because that I have not done. So as you can see, this is a brand new search that I haven't really looked at in much detail. So I want to avoid vacant land as much as possible. And I do want the land with the building. So it's not enough just to have the building, but I want it with the land as well. So let's see if we can figure out how to get, yeah, see, I don't want a for lease. So commercial multifamily. Okay, well, let's go all commercial multifamily. Let's see if anything comes up here. Okay, there we go. Nothing. Okay, so that's fine. So, okay, so let's go back here and we're going to go back to all commercial. And I do want the land with it. So let's go this way. Okay, so I put back in the commercial. I don't want the newest. What I want is the lowest price. Okay, and then I don't want this square foot because that basically means that it's being leased out and not being sold. So, and then probably anything that's like 80 or 90, like that's in that price range, you're probably just buying the business and not the land. Okay, so I could be wrong. Okay, so it's waiting for your business. Okay, so you're looking for a perfect location in Cranbrook to have a store. Bring your dreams to life in this Main Street, Cranbrook. So is this just vacant land? Is that what this is? Under 1 acre freehold. Yeah, it's vacant land. So you're buying a piece of land here and then you have to build on it. So you have to make sure that you get the permits, the architectural drawings, everything. So that's a bigger different strategy than what I'm doing. So you can see here, there's a brochure here. So you can click on that. And I'm hoping that you guys are seeing that. Let me see what you're, yeah. So you guys are seeing that and it says it's not found. So probably what that means is either the agent made a mistake on connecting it or that the property is no longer there, meaning that it's either sold or they took it off the market. So it's only been 31 days, so it probably got sold. So let's go back here. Oh, okay. So let me see here. Yeah, see, so all of these ones here that are like less than $2,000 or that's showing square footage, those are just rentals of or leases of the land. So I'm going to avoid that. Oh, okay. So these ones here are the 120. That's the new development out on just the outskirts, I think, of Cranbrook. So we're just going to keep going here. Okay, so usually I would bypass all those smaller ones because I'm not in land development. Okay, so I'm going to go and see what we have here. So this one here, 2.5. So let's see what's going on in this one here. So this one is 3.4 acres, zoned property, formerly a golf driving range and currently an RV park with month-to-month rental sites. So you're buying the land and an existing RV park. Okay, so this highly desirable strip development property is underutilized, great highway visibility. So let's see, this property is a prime development site. Okay, and there's nothing else provided on there here. It's been on the market for 146 days. So if you want, you could look at acquiring this land, run it as an RV park, build it up, and then in the meantime, work at developing it, potentially subdividing the land. That is a very long-term play. Okay, so now I'm not exactly sure what's included with like the area size here. Oh, look, there's this one here. So yeah, so it is operating as an RV park and bringing in clients that way. So that would be a potential strategy. So why don't we, let's see here. I'm going to assume that it's this lot here and not including this area with this big building and then this storage here, although RV storage is quite pricey, anywhere from $200 a month up to a couple of hundred if it's sheltered. So potentially you could make this into a fancy RV park with lots, like subleasing the lots. Now if you look over here, it looks like there's an RV park here as well. So just back over here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35. Okay, so it looks like there's about 35 lots in this site. So why don't we just run an easy analysis on this, and then, if you're interested in this one, then that's where you would go and make sure that you use the right spreadsheet. for calculating RV parks, because so operating an RV park is almost like, how do you say it, like short-term rentals, because you're not going to have people coming year round, and your operation costs, like the advertising, is going to be different, and you're going to have the summer crew to help with certain things. So let's bring up the Excel sheet and we will run the analysis on this one. So I am actively looking for an RV park. So if anybody is aware of an operating RV park, it doesn't need to be making money. That would be something that we would work on. Okay, so if you know of an RV park that is for sale, let me know, or the owners are willing to sell it. Okay, so I'm gonna so this is the spreadsheet, so you can see how we're gonna analyze this very quickly. So this is in Cranbrook. Okay, so I just put that in there so I know. The price was, let's say, 2.5. 250. Okay, so, you know, one of the things that you automatically may realize is that, okay, you know what, we're not going to be making money on this property. So what I want to know is there enough income to hold it while I grow this RV park, or get drawings and build an apartment building there, right? So I'm going to say 35 unit sites. Okay, and I'm just going to put in here $50 times in the summer months. Okay, so it's $50 per night for an RV, roughly. And we're going to say 3.5 months times 30 days. Okay, so you should be able to see the formula that I'm putting in. I'm just doing a very quick calculation, very, you know, assuming 100% rental just for the whole summer. Okay, so that's going to be $50, 3.5 months times 30 days. Okay, so roughly I'm going to get $5,000 a month times the, yeah, for 30 months. Okay, so now I'm going to times it by the number of sites. Okay, so that's going to be for the full year. So now I'm going to divide that by 12. Okay, so that gives me about $15,000 a month to play with. Okay, so if you missed that, what I did was I added in the 35 sites, and then I divided by 12 to make sure that it's just for that 1 month, because I want to make sure that I'm just looking at it from the 1 month. So 15,000. Okay, so we're going to go down here and go 20% down payment. So because it's an RV park, I'm going to just increase that a little bit, and I'm going to put down 5%. You know what? I'm going to put 6% here. Okay, so without even adjusting any of my expenses right now, I'm already at a minus $500 a month. So I already know that, okay, every single month I'm going to be putting out $500. So now I'm going to go back and just not play around with this, but I'm going to look at the taxes. So in the listing, it will give you, oh, in this particular listing, there is none of that information. So I'm going to assume that the taxes are $15,000. Okay, the insurance for an RV park is going to be a little bit more, so I'm going to go 7,000 here. Oh, not 70. Yeah, that would be crazy. Property management. So I would probably self-manage this in terms of running it, but then I would have a local team helping me do a lot of the work. So I'm going to leave the 10% in there. The repairs, the vacancy, that's fine. And then the other, so that's fine too. So as you can see now, I'm minus $2,000 a month, because what's happening is I've got the insurance and the property taxes, and I haven't even factored in the heating and the electricity. Okay, so as you can see, as the rates are going higher, it's going to be very difficult to cash flow on any opportunity unless you put down more capital as part of your down payment. Okay, but we don't want to tie up our capital this way. Not unless we have to. Okay, so another way to do this is saying, okay, well, instead of doing the $50 a night for the 3.5 months, is there something else that we could do potentially. So if this RV park was around a lake, you could potentially do ice fishing, right? So then you're going to want to account for that. Now, $50 a night during the summer is really cheap. Excuse me. So let's just say we go up here and we do $75 a night. Okay. So if we do $75 a night, are we cash flowing at that point? And yes, we are. Okay. So I would actually look into this significantly a lot more. So what I would now do is saying, okay, so the reason why I know that the RV prices are 50 to 75 and maybe even $100 a night is because we lived out of our RV for a good 2 years. And so I'm very, very familiar with the cost of RVs and stuff. So let me now show you, okay, that if you decide that you want to continue with this opportunity, what you would do next. So let me bring up the site, the site here. So 2.5. So you could potentially get this down a little bit, and it may make sense to, look for a VTB on this, like seller financing may also be an option here. So this RV is called Regency Park Resort. So now what I would do is go up here, and then I would actually type in Regency RV Park. Okay, and there it is in Cranbrook. So it's a 4-star out of 64. I would look over here to see on the map if there are other competitors around, okay? Because you don't want to be in a small town, which Cranbrook is right now. You don't want to be there and then potentially have like 5 competitors around you, right? So you want to know who your competitors are. Okay, so here's the park here. So it's on the northern side of the town. So I'm just going to zoom out a little bit here. There's a lot of outdoorsy stuff to do. There's a ton of golf courses from what I remember in Cranbrook. Okay, so I'm going to go over here and I'm going to, where is this here? Expand. Okay, so I want to find RV parks. Okay, let's see what comes up here. Okay, so there's Rocky Pine RV, which is very close to Regency. And so I would check out both of those. There's Grand Rock Estates, so that's not going to be a competitor. This mobile home park is not really a competitor. Those are, it's a mobile park, so it's not the same thing. So there's a GP, I think, that looks like a hotel, but I'm not exactly sure. So there's actually not that many RV parks in Cranbrook, and Cranbrook is a beautiful, beautiful little town. And if you don't know where Cranbrook is, okay, it is on your way from like major Vancouver all the way to Calgary. So you would take this route. Okay, so this is Cranbrook over here. You would take the route from the west, drive through, and then make your way to Calgary, or head up north to to Edmonton, or head south, which is what we did, and we went to Yellowstone over the summer. So that was a pretty great trip. Okay, so side note there. Okay, so let's check out Rocky Pine. So Rocky Pine has 4 stars as well. And yeah, it's really right next to each other, which is pretty funny. So, and that's probably the site. Oh, it looks like it's across the way there. Okay, so you should be able to see that. So Rocky Pine is across the road from Regency Park. And yeah, so it's not bad. So it has a Facebook, it has a website, no Facebook. So that would be a way to increase the flow through there. Okay, so let's go to their website now and take a look at the pricing that they actually charge for it. Okay, and they also have tenting there too. So that's good. Okay, so I'm going through this a little bit fast because a lot of campsites, websites are always pretty much built the same way. They basically want to tell you, all the great stuff about it. So I want to see if I can find their their pricing list. Oh, wow. Okay. So this website is very basic. Like there's no pricing on here from what I can tell. So that would be one way to increase the, oh, so they do have a Facebook here. So that would be another way to increase clientele, is to make sure that you advertise the pricing. So it says it's always open. Yeah, there's no pricing here at all. Okay. So it could, yeah, so I have no idea how realistic my $50 to $70 per night is. There's lots of stuff to do in the wintertime, but you know, you'd have to check to make sure that their lines are winterized as well. Okay, so let's go in here and see if we could find something else to analyze. Sorry, so major sidetrack there. Okay, so here is a gas station. Okay, so what is happening here? So 5.5 million shopping plaza with 8 bays, 7 tenants with the owner's own petrol gas station. The gas station is operated by the owner, very good location, profitable gas station business with the very strong tenant. Land is 1 acre, the biggest city in Eastern BC. Okay, so let's see what else is here. Okay, so that's all they provide, so not very much information. So with 8 bays, 7 tenants with owners stuff. So let's see, any other, yeah, no. So you could see right behind there are businesses there. Okay, so this is 404 Cranbrook. Love that address. That is, you know, like when you go to an error page on the internet, it brings up the 404. So that's, yeah. All right, so this is copy address. Where is it showing up here? Saying here. So let's go here. Where is it? Right there. 404. 404. It really is an address. Huh, that's interesting. Okay, so let me see here. So I want to go and see, well, the other way. Let me close that. I'm going to zoom in because I want to see what businesses are actually there. Oh, there it is. So you could see there's a Petro-Canada there, and I'm going to drop my person in, and I want to see right there. There we go. Okay, so now it's like I'm visiting there. Now, keep in mind, this is from October 2022. So it's about a year old, but it gives you an idea of what's around there and sort of like the situation that's happening there. So there's the gas station. There's a restaurant or something over here. Now, I drove through Cranbrook over the summer, and I don't know if I was even at this location there. So there's the lottery. So that's part of the gas station. The Taco Time. Oh man, Taco Time was my place to go when I was in university. Okay, sushi place, sports grill. So the other 7 bays that they're telling you about is these businesses here across from Denny's and Burger King. So you know this is a major street, right? So there's a lot of clientele coming through this way. So okay, so let's see if we can go and see what these other 7 businesses are. And it's not letting me go there. Okay, so I'm going to go on the road, and I want to see what these other businesses are here. So there's a cannabis store, a vacuum store. Okay, so, okay, so part of the due diligence would be to figure out what the 7 bays include, and if it includes actually all of these businesses here as well, or if it's something else that's referred to in the gas station there. Okay, so let's run the analysis on this. So they are asking for 5.5 million. Okay, so let me share with you the spreadsheet. And let's go into the calculation on that one. Okay, and then after we do that, we are going to go into the questions. Okay, so before I bring that up, I'm going to save the last spreadsheet, and then I'm now going to save this one, and I'm going to call it the gas station Cranbrook. gas station. So I save all of my analysis because I want to go back to it if I ever need to go back to it and have a good starting point for my analysis. So I'm in Cranbrook 5.5. Okay, so as you can see, I don't negotiate on the price until I've done my due diligence portion. So I always just assume that my buying price is going to be whatever the seller's asking for. Okay, so I'm going to put in 8 businesses. Okay, so I'm going to put in businesses here. Okay, and so I'm going to assume that each business, okay, is paying $2,000 a month in rent. Okay, so that may be quite off, okay, because it depends on what the triple lease is and assuming that they have a triple lease in that spot. Okay, so that's $16,000. You know, the gas station is probably paying a lot more for that. So I'm going to just leave it at 2,000 here as a starting point. The taxes usually is 0 because you would split that with the different businesses. The insurance as well, you would split that in the triple lease. So property management would still be there. The repairs would be a lot lower because the triple lease would cover the repairs within each of the shop. So I'm going to leave 5% there for now. The vacancy, I'm going to leave at 8 because if for some reason, if one of those businesses shut down, then you're potentially renting out the lease space. Okay, I'm going to also leave 5% for other. So right now I'm going to leave the 25% down. I'm at minus $13,000 a month. Okay, so if I was to pursue this, I would get the rent roll and find out exactly where all the rents are in terms of the leases and how much longer they have on the lease. Because if a business only has like another year, they could potentially just walk away from their lease and now you've got a vacant commercial space that may take a little bit of time to get a new tenant in there. And getting a business tenant is not the same thing as getting an apartment family tenant. Okay, it's a completely different, longer strategy. Okay, so let me see here. So other than that, like if you look at it, like the annual lease on this is only $50,000 compared to the 192 that would be coming in. So the rental income has to be a lot higher than this to make it worthwhile. So let me just see on the listing if they give a square footage here. Okay, so 17,000 square footage. So that might be a better way to calculate this. So I'm going to go, I've been here, 17,000 square feet. Okay, so let's just say 17,000 square feet. Okay, there's 8 of those. So 17,000 square feet, star $16 per square foot. Okay, so that's what the lease would be. Okay, so I'm going to write at 16 per square foot. Okay, and I'm getting the 16 per square foot from the Realtor.ca site. Remember when we were looking at this at the beginning and there was, I'm going to bring this back up here so you could see how I came up with 16, because every city is going to have a different price on their square footage. So see, page 6 of 6. Okay, so I'm going to go back to page 1 on this Realtor.ca site here. So let me share with you where I was looking. So here we go. Okay, so I basically went back to the Realtor.ca site, looked on page 1, and you could see it's $12, $16, $17, $20, right? For maybe the nicer ones. Okay, $1.32 per square foot. Oh, that seems really low. Okay, so $18 square foot. So at this point, I'm just picking a number and saying, okay, you know what? If we were to rent out the square footage, how much would we be able to make at $16? Okay, if you don't like that $16 number, what you could do is then just change it, right? Because at this point, we're just messing around with the numbers, right? So it doesn't really mean anything yet. So if you want, you could go and say, you know, $12. Okay, so I'm going to go back here and change that to 12. Okay, so this is 17,000 square foot at $12 a square foot. Okay, so, and then that would be for, I'm assuming the year, so I'm going to divide it by 12, maybe. Okay, so that would be something I would clarify with, that is a good question. I don't know if that's actually per month or per year, if it's at $12 a square foot. So let me just bring that back up here and we can look at that together to see if we're able to figure that out. So share screen, go back on Realtor. Okay, so this is $16 per square foot. So let me go in here and see if it's per month. Yeah, you know what? I actually don't know. So it's interesting here. So on this one, they actually have the previous histories on here. So you could look at that as well as a way for gauging the growth in that market. Okay, 16,000. Yeah, so this must be 2,000 for the month. Okay, is the way I'm reading that. Okay, so which works out to be 16 per square foot. Okay, I'm going to go back over here and see what was the other one that we looked at. Okay, this one here, this $20 one, square foot. Okay, so there's all these stores here. Oh, this used to be a retail clothing store of some sort. Okay, prime retail space. Yeah, so basically here you're just building a business in an existing place, which is not something that I would recommend because you technically don't own the land, right? And so one of my strategies is to buy the land and then either with the business or without the business, but the land is what I'm after. So, okay, so I would say that this is $20 per square foot, but then it's calculated by monthly. Okay, so that is it. Okay, so as you can see, 30 minutes runs by really, really fast. So we are now going to go into the questions. And I did have some feedback from one of our viewers. And so I'm very thankful for whoever's tuning in and giving feedback and wanting some questions and answers and stuff. So one of the comments that I got back was that, Huong, so far the questions that you've answered have been very, they're for new investors. So, you know, can you answer more questions that are more for seasoned investors? So I'm going to go through some of the questions that I have and pull out the ones that are more for seasoned investors as opposed to like somebody new coming in or trying to just get started. Okay, so I will put the REIT and the FOMO question at the end. Okay, there was a question that came in from the mastermind group about setting up a private, using private money to, in a syndication form to invest in properties. So that one's not a beginner question, but I think what I'm going to do is put that in wait. I'm going to put that on the maybe answer question list right now. Okay, let me see. This one here is I don't have income and savings to fulfill the goals of buying multifamily. Okay, so I'm going to put that in the newbie pile. So we're not going to answer that one today because that one is not for someone who's already in the game. Okay, the next one is about systemizing networking activities to raise capital. Okay, so this one's actually tied to the mastermind question that came in. And then there's the systemizing renovation businesses. Okay, so this actually is similar to another question that I know that came through about combining businesses together that are renovation companies and then building a service out that way to get into real estate. Okay, so we'll maybe talk about this one here about networking activities. because that one is actually applicable to new investors, but also seasoned investors, because even regardless of where you are in your journey, networking is a big part of getting money, building contacts, building teams, making sure that you have opportunities in deal flow, and then connecting with the right people. Okay, so the question that came through from the mastermind group was, how do you get a group of people together to do syndication, such as private lending on mortgages or to buy a property together? Okay, which also links to the networking question about how to systemize that. So let me just address how to go about that and making sure that you're doing it as efficiently as possible. So one of the things that I always suggest is that if you are going to go and network, if it's a 1 hour networking event, make sure you give yourself that 1 hour to follow up afterwards with the people that you meet at the networking event. Now, the thing is, when you go to a networking event, it's not about the number of people you meet. It's about meeting 1 or 2 great contacts that you want to follow up with afterwards. Okay, so if you go to a networking event and you meet 20 people, okay, but you can't tell me anything about their family, their goals, where they went on holidays, then you haven't really made a good quality connection with them. Okay, so you know, when you go to a networking event, that's what you want to do, is you want to find those 1 or 2 individuals. And then from that, you're going to want to basically frog them. And you're like, okay, Huong, what the hell is fraud? Okay, so frog is a process that I learned when I was a mortgage agent. Thank you, Michael. He taught me this concept of frogging somebody. And basically, it's a way to just make sure that you make the effort to ask them questions and get to know them so that you make that quality connection with them. Okay, I'll just put in a plug there for Michael. He is a mortgage broker with Dominion Lending, based out of Toronto. Okay, so I will look for his contact and dump that in the chat. The other thing is, as well, as when you're raising money or networking with individuals, you want to make sure that the individuals that you're connecting with are accredited investors, meaning that they have high-paying jobs, like 200 or 250 per year between them and their spouse, or that their net worth is over, I think it's $1 million. So at this point, what you want to do is definitely check on that information, talk to your lawyers, accountant, and financial advisor about this. Because the thing is, if you're going to be pooling money together and meeting individuals and potentially bringing them into your opportunities, or, you know, wanting to work with them, you want to make sure that they're accredited, because if they're not accredited, you could potentially be putting yourself and your partners into jeopardy down the road if something would go wrong with the opportunity. So you definitely want to make sure that they meet those criteria. So, you know, I do private lending as well all across Canada, and it's one of the best ways of getting into a real estate deal without doing a lot of the work. But if you're on the managing side, which is what Lenka was asking about in the mastermind, is you're going to be doing the work while bringing in people's money. So your first priority when you're working with other people's money is that you protect their money first. Okay, so repayment of that capital is definitely the highest priority there. So it's not really, you know, you protecting your own money, but it's you protecting your investors' money that's coming in. And that's one of the questions that I always ask when somebody's asking me to put my money into their opportunities, is I say, hey, you know what, what's your first priority here? Like, what's your main job, right? And if they give me any other answer other than, Huong, my first job is to return your capital plus a healthy interest, right? If it's not that answer, then they have to give me another answer. And then it's, you know, it sort of falls down the ranking of how much I want to invest in that opportunity. Okay, so the other thing with networking to raise capital is, don't go to a networking event just for the sake of going. Like, make sure you have time to follow up, make sure you have time to connect with really good quality people. Make sure you go to the right networking event. There's so many networking events out there. There's so many, you know, social groups. Make sure you go to the right one that's fitting for what you are looking for. So, you know, if you're in that same pool all the time, okay, maybe switch to another pool. Okay. Now keep in mind that if you go to a bunch of different pools or, you know, events, and you're not seeing the result that you want to see, it could be one that you're not in the right pool. Okay. But the other thing is that maybe the way you're approaching the investors is not the right way. Okay. So that's part of being sincere. That's part of being authentic. You know, so one of the comments that comes up all the time is, Huong, I don't have the experience, so that when I'm networking and asking people questions and trying to build these opportunities and teams, because I don't have the experience, people aren't interested in talking to me. Okay, so that is a very fair question or situation to be in. But here's the thing, if you don't have the experience, then come from the point of saying, hey, you know what, I don't have the experience, but I have this team that I'm working with. I have this opportunity and my team, you know, like this is the opportunity that we're working on. You don't need to be so direct with them to say, hey, you know what, do you want to come in on this deal with me? No, right? Ask them, hey, you know what, I'm working on this opportunity, you know, what could I do to improve it so that somebody like you would come in, right? That is a different way of approaching individuals who may or may not potentially be a part of your networking group already, right? And who may potentially want to invest in your opportunity. So ask questions and be curious about, you know, what the other person is trying to do in terms of their path and their growth, and then figure out a way to meet that need. So if you are new and you don't have the opportunities or the experience or the money, ask them, hey, you know what type of opportunities are you looking for, right? And then work from that point of view. Okay, so that is the networking question. And I hope that answers also the questions from the mastermind about starting a group mortgage. It's not easy to bring in a bunch of people together with money to buy an opportunity, because you then have to answer to those individuals. So, you know, just make sure that you, being the working partner, that you want to be in that position, because you may not see any money for a couple of years. And so a lot of the working partners I know have gone back to taking a job, right? Or doing something outside of real estate part-time because they need that cash flow. So if you are in real estate as a mortgage agent, a real estate agent, or if you have a contracting company, then getting a group together is a good way to supplement that side job that you have in real estate. Okay. Thank you, everybody. Okay, so we've gone over a little bit of time again, so I do apologize for that. So I will see you guys next Monday, same time, same place. If you want to see me before that, please feel free to reach out to me by email or by booking a one-on-one call. Otherwise, I will see you here next Monday answering questions and looking at a deal. All right, thanks, everybody. Bye-bye.